Let's talk about a legend, the name Michael Burry. It's huge in the finance world. You probably know him from the movie The Big Short, right? He's the guy who supposedly saw the 2008 crisis coming when no one else did. So you can bet that when he makes a new, massive bet against the market, people, well, they listen. But what if the story we all know isn't the whole story? Today we're going to dig into the Michael Burry Paradox.
Okay, so check this out. January 2023, Burry goes on Twitter, now X, and posts this. One single word, sell. That's it. Coming from the supposed prophet of financial doom, that is a stark, clear, and frankly, terrifying warning. You can just imagine hundreds of thousands of investors seeing that and just holding their breath, waiting for the floor to drop out.
But the crash? It never came. In fact, in a twist that is just dripping with irony, Burry's tweet marked the exact bottom of the market for the year. The very next day, stocks started a massive rally that basically left anyone who followed his advice in the dust. And believe me, this isn't just some isolated fluke. It's actually the key to a much, much deeper story.
Which brings us to right now. Recent filings have shown that Burry is at it again, making another huge, headline-grabbing move. This time he's got a massive short position against the darlings of the AI revolution. We're talking NVIDIA and Palantir specifically. He's betting on a crash, and boy, is he betting big.
So how's he doing it? Well, he's using something called a put option. The easiest way to think about it is like buying insurance on a stock. You pay a little bit of money up front, that's called the premium, for the right to sell a stock at today's price sometime in the future. So if the stock price totally tanks, your option to sell at that old, higher price becomes incredibly valuable. It's a straight-up bet that something's going to fail.
And the scale of this new bet, it's just staggering. The headlines were everywhere, screaming that Burry was shorting these two companies for a combined notional value of over $1 billion. I mean, when the guy from The Big Short makes $1 billion bet against AI, the whole world sits up and listens. But what's his actual reasoning?
Now this is where it gets really, really interesting. Burry's core argument isn't just that stocks are a little too pricey. No, he's alleging widespread accounting fraud. He's claiming that these big tech companies are juicing their profits by saying their expensive gear, like AI chips, will last way longer than they actually will. See, doing that reduces their yearly costs on paper, and poof, their earnings look bigger. It is a very, very bold accusation.
A bold accusation, for sure. But does it actually hold up when you look at it closely? Let's break down the numbers, based on the source material we analyzed, and see if this prophecy is built on solid rock or maybe something more like sand.
So if we take Burry's theory and we apply it to a company like Meta, the source estimates that this little accounting trick would pump up their annual profit by about $2.5 billion. And that sounds like a huge amount of fraud, doesn't it?
Well, maybe not so much when you put it in perspective. See, Meta's actual net profit for that same period was $62 billion. That means this so-called modern era fraud he's talking about, it accounts for less than a 5% difference in their earnings. So you have to ask yourself, would a company really risk everything for such a tiny gain? Is this really enough to bring the whole market down? The math just feels kind of thin.
Burry also loves to compare today's tech spending to the dot-com bubble. But again, you poke at it a little and the comparison just falls apart. Remember the dot-com companies. They were burning through cash with no real products, no real customers. Today's tech giants, your Amazons, your Googles, your Microsofts, they provide services that millions of us are using every single day. They have these incredibly profitable, established businesses. It's not even the same ballpark.
And you know, this isn't the first time one of Burry's big predictions has raised a few eyebrows. When you zoom out and you really look at his track record since that famous 2008 call, a very, very different picture starts to take shape. The pattern is actually pretty consistent. In 2021, he famously bet against Tesla, calling it a bubble, right before the stock rocketed up over 100%. He got involved in the whole GameStop frenzy, and a lot of people who followed his lead got seriously burned. And of course, we can't forget his January 2023 sell tweet, a call that turned out to be the absolute bottom of the market. This doesn't really look like prophecy, does it? It looks like a pattern.
And this pattern, it forces us to go all the way back to the beginning. Back to the legend itself. What if this story of the 2008 Big Short, the one we all saw in the movie, what if it left out some of the most important parts?
The Hollywood version? It paints him as this lone genius, but the source material suggests a different story. A high-stakes gambler playing with other people's money. The movie shows a clean win,
But the reality was that he had massive losses in 2005 and 2006, so bad that he had to actually lock his investors' funds to stop them from bailing. The film implies it was this verified, massive success, but the truth is a whole lot murkier.
Yeah, the details here are pretty damning. He was so early on his bet that his fund lost over half its value. He had to legally block his own angry investors from pulling their money out. And this is the real kicker. The final profit numbers, they were never officially audited. Burry prepared the reports himself, he took his cut, and then he immediately closed the fund, which made any kind of formal investigation impossible. The entire legend is built on unverified, self-reported data.
So, if he's not a prophet, and his track record is, let's be honest, pretty shaky, what in the world is going on? Well, the source material we analyze proposes one final explosive theory. What if Michael Burry isn't a failed prophet? What if, instead, he's the perfect weapon for Wall Street?
It's a cycle that the source calls the Burry effect, and it works like clockwork. Step 1. Burry, using his legendary status, makes a super dramatic bearish call. Step 2. The financial media blasts it absolutely everywhere. Step 3. Regular retail investors, trusting the hero of 2008, they follow his lead and they sell or they short the market. But then comes step 4. The market does the exact opposite of what he said. And the result? Step 5. A massive wealth transfer, moving from the pockets of the retail investors who listened to Burry directly into the accounts of the big Wall Street institutions who are happy to take the other side of that trade. It happens again and again.
And here's the magic trick. This is how the illusion works. The media screams, billion-dollar bet. But remember, that's just the notional value. The actual money Burry has at risk is just the premium he pays for those options, which is a tiny fraction of that huge headline number. It lets him create maximum fear and a huge media sensation for minimum personal risk.
And now for the final twist in the story. Shortly after these latest bearish bets against AI were made public, Burry's investment firm, Scion Asset Management, officially deregistered from the SEC. It just doesn't exist anymore. He made his big, headline-grabbing bet, the media ran with it, and then his firm just vanished.
So all of this leaves us with the ultimate question, doesn't it? Is Michael Burry the brilliant prophet who sees crashes coming, even though he has a long history of being wrong? Or has his 2008 fame been hijacked, turning him into a pawn, the perfect tool for Wall Street to whip up fear at the exact moments they want regular people to sell? The answer to that, well, it changes everything we think we know about the man and about the market itself.